Bitcoin bounced off support and is on the way to resistance at 25k. The US dollar is weakening and pushing the euro-US dollar exchange rate comfortably back above parity again. And in sectors, consumer discretionary has moved into the leading quadrant, while financials are picking up inside improving, and the defensive sectors are still inside the weakening quadrant, but moving lower on the JDK-RS ratio scale. We're going to look at the charts and see if we can find some answers. Hello, Sector Watchers. Welcome to the show. This is the 144th episode of Sector Spotlight for Tuesday, the 13th of September, and I'm recording it on Monday, the 12th. My name is Julius de Kempenaer, and I am presenting to you from Amsterdam in the Netherlands. Ladies and gentlemen, this is Sector Spotlight. Last week we talked about the completed monthly charts and we skipped the rotation of asset classes. So it's about time that we go back and see what is happening at an asset class level, at the highest level in our investment portfolios. And we have the both RRGs here, the weekly and the daily rotations for the universe of asset classes that we track here in Sector Spotlight. And to start with, I'm going to make a change, and that's followed by a couple of emails that I got from people who basically were twofold. People said V&Q, which is the Vanguard real estate fund, is kind of is double. It's not really an asset class in itself, at least not V&Q, because that means listed real estate and not real estate as in brick and mortar. Which is very hard to trade on an exchange. And V&Q has got a high correlation with XLY, which is the real estate sector index, which we always cover when we talk about the S&P sectors. So that was one side. And other people asked why I didn't pay attention to cryptocurrencies or to Bitcoin. And I do that. I cover crypto markets on a regular basis, but not enough, probably not as much as I should in Sector Spotlight. And for that reason, I am I'm replacing V&Q in the universe of asset classes with Bitcoin. Bitcoin being sort of the proxy of the cryptocurrency universe. And I have set up the charts here, the daily on the right and the weekly on the left, with Bitcoin replacing V&Q. I still have to do that in the drop down, so a little bit of patience please. I'll try to do that this week and make the universe in the drop down look exactly as what you're seeing on the screen right here. If we start on the right hand side with the daily rotations, then we can see that both commodity ETFs, GSG and GJP, are still going through that corrective move. We also see the retracement of the US dollar index, which is still very high on the JDK-RS ratio scale, but rolling over. That's the retracement that we currently see. We'll look at the longer term chart when we start to look at the individual charts, because long term, I still think that the US dollar is very strong. And if we look at the shorter term rotations, the daily rotations for most importantly SPY versus the fixed income complex, so government bond, high yield and corporate bonds, you can see that the fixed income tails are rolling over and SPY is starting to curl up, and our freshly acquired asset class of cryptos, Bitcoin is starting to improve after a very weak stint. They're still inside the lagging quadrant and they're very low on the RS ratio scale, but they're starting to pick up. If we put that into a longer term perspective, then we can see that improvement for Bitcoin versus the US dollar is actually part of a longer term move. because here you have 5 weeks of movement and this is 5 trading days, and you can see that the longer term picture, the longer term move is actually for Bitcoin to improve on a relative scale versus VBINX, I have to say. I'm going to take this off to make the rest of the tails better readable. And what we then see is the clear improvement for stocks after a rotation on the left-hand side. We're about to cross over from improving into leading. And that will soon be supported if what we see at the start of this week is going to continue with SPY picking up relative momentum and potentially relative strength. And what we very clearly see here is the weakening of the fixed income tails, government bond, high yield corporate bonds. Basically what this means is that the ETFs are going down, so prices for these bonds are going down, which means that yields are going up. Essentially, one would say that that is a negative for the stock market. On a rotational level, the stock market is either going up and in that way beating bonds, or when it's going down less fast than bonds, so it's still outperforming. So the charts here, both RRGs on the daily and the weekly scale, give a pretty clear preference for stocks over bonds at the moment. The long tails on DJP and GSG on the weekly RRG are still very visible. They are still going through that long corrective move, but they're holding up well above their respective support levels. So I'm going to expect them to rotate back up, and over time, it's going to take a couple of weeks probably, continue their turnaround and move higher in absolute terms. Let's take a look at some of the individual charts. I think the most important or the most notable move that we see at the moment is the one in the dollar. And I always look at the euro dollar chart. And what you can see here is that after a period of relative stable movement between, let's say, 0.99 and 101, it looked as if it was breaking lower, but it didn't really happen, and now we're shooting off. And the long-term trend is pretty clear, but I think short-term there is quite some improvement visible for euro-dollar, which means strengthening of the euro, weakening for the dollar. But as you can see, there is still quite some overhead resistance levels. So it's not going to go to 110 or 115, but maybe a couple of big figures, 102, 103 is on the cards. If we look at the weekly chart, you will get a little bit of a bigger time frame picture, and you can see that downtrend that we've drawn here in the with the trend lines over the highs and over the lows, which is containing that euro-dollar rate inside the trend channel. But I think what I'm watching here is the test of that 0.99 support level and the build-up of a positive divergence between the RSI and price. I think that 102 is now the level to watch, and if that gives way to the upside, if euro-dollar is able to take out 102 on the upside, then I think 103, 104, potentially 106 is achievable in the next couple of weeks. The long-term, the really long-term trend in euro-dollar got damaged severely a couple of months ago, and I'm gonna bring up that long-term bar chart for euro-dollar and to show you what I mean. That's when we broke 105.6, 106. That's when the damage to euro-dollar was done. That's when the signal for more strength for the US dollar came. And I'm still, even though I think we can go higher a couple of handles, I'm still gonna judge this as a recovery within a longer-term downtrend. We're gonna monitor it, but that's how I look at the euro-dollar exchange rate at the moment. We look at government bonds. Obviously, that's the entire curve. That's the aggregate. We can see that 23.3 is now offering support in terms of price for the Govt ETF. If you look at the relative strength versus VBINX, you can see that it's starting to weaken again, and the red line is almost crossing below 100, which will push GOVD into the lagging quadrant that you can see here on the RRG. If we look at IEF, that's the 7 to 10 years. Look at the difference. You can see here that GOVD is well below its October 2018 low. If you look at IEF, that's resting at its October 2018 low. So the entire curve, the aggregate, is a little bit weaker than the 7 to 10 year Treasury bond ETF, which is now resting at a support level around 99.4, but the relative outlook, the relative picture is quite similar to what we see in GOVD. And if we bring that, so if we then go to SPY, then obviously that's probably most heavily watched chart at the moment, and we see that the new low is put in place around 388, 390, which is respecting support coming off these two old highs and a little bit of the low right here. The upside is still littered with resistance. There's this, if you want to call it a neckline, that's running around 415. There's the area of the gap in the previous high around 420. There's a falling resistance line coming in around 425. And obviously there's the 430 level that's going to play a big role. I expect that to be a heavy resistance area. Nevertheless, we can't deny that the short-term outlook for stocks is improving. And we can see that even better in the weekly chart. It's too early to call this the first higher low because this is today's price action of Monday, the 12th of September. So it's very well possible that if on Friday we close below 388.4, then there is no new higher low in place. However, gotta admit that, you know, given the strong start of the week and the surrounding data, I would expect 388 to hold and get a new higher low into place. It's still working its way below this falling trend line, but there is undeniable improvement going on for the stock market. So got to keep an open eye, especially when we break above 430 and we take out that falling trend line. That would be probably the definite end of this corrective move and a signal to for a return back to the longer term uptrend. We're not there yet. Short-term improvement, yes. Longer term, we need to wait a little bit more for extra confirmation, or at least that's my take on current developments. If we bring that to a comparison of stocks versus bonds, I already told you that the rotation on the RRGs are suggesting that stocks are the better asset class over bonds, and that is confirmed by this price chart, which combines ITOT, which is the entire US stock market, versus GOVD, which is the entire US bond market, government bond market. And if we read this and label this as a falling wedge, then we can expect a return back to the peak of the channel, the start of the pattern, I have to say, which is around 4.2. And in terms of relative strength, that's quite a bit of a move for the ratio of ITOT and GOVD. And it means that we will probably see a stronger performance for stocks than for bonds in the next couple of weeks. As I have added Bitcoin as an additional security in the asset classes, basically as a new asset class, I want to start or use this occasion to take a quick look at the developments of Bitcoin over time and how I am reading this chart at the moment. If we look at the really long-term picture, or really long-term, 4 or 5 years of price history in Bitcoin versus the US dollar, on the left-hand side of the chart, it's a weekly chart. I think that there are a few very important levels to watch in Bitcoin, and so far the market has respected these levels pretty well. And the first one is here around 12.5, 13,000. That was a very important resistance level from 2019 to the end of 2020. And when that level broke, we had that massive rally. So the response after the break of that overhead resistance was textbook. And we saw a strong rally which ended around 65,000 US dollar for one Bitcoin in April 2021. Then we saw the retracement that ended around 30. We rallied again, and then you see that 65, peak was 69, 65K area, once again responded very well to the previous high. It started to act as resistance, and we came down again. Not quite all the way down to 30K, but 34 before a little hiccup. And then you see that from May to start of June, you see that Bitcoin is hovering above that 30K level. And when it breaks, again, a textbook response with an acceleration lower, which ended for the time being around 17.5, 18,000 US dollar. And that's where we've been spending time since June 2022. And what's happening in the near term is that you see that there is a positive divergence building up between price and the RSI. MACD has started to rise. There's no positive divergence here yet, but it's definitely visible in the RSI. And it looks as if we're underway to the top of this little range around 25K. So that's another 2,500 US dollar upside potential for Bitcoin. If we bring that to the daily chart, then obviously we see the same levels coming back. Here is that 30K, 28,000, 30K, that's this line right here. You saw the acceleration lower after the break, and you see how a new support area has developed around 17.5, 18,000. We've got 1, 2, 3, and another fourth test of that level since June. We also see that a couple of days ago, Bitcoin managed to rally out of that falling channel. And you see that also here on the daily, a positive divergence is building up between price and the RSI. That supports my idea that we're underway for a test of resistance near 25K. If we break that level upward, then the next overhead resistance level is already waiting around 28K. And I think that is a major, major, major level. If we interpret this 64 to 30K as a big, massive double top, then we've got 35,000 K as downside potential, which would bring it back to zero, which is probably not going to happen. So we have to make that some sort of a percentage retracement. But I do think that a major high has been put into place for Bitcoin, basically in the year 2021, because both highs were created in 2021. We're breaking it a couple of months ago. So the upside potential, so in terms of US dollars, it's still pretty big. But in the bigger scheme of things, the upside potential for Bitcoin is very, very limited. At first to 25K and then to 28K. And only when we are able to get back above 28, preferably 30K in Bitcoin US dollar, I'd be very, very difficult with very cautious with really long-term long positions in Bitcoin, because the ease of movement right now seems to be to the downside. What would happen if we take out 17.5, because we can see that 17.5, 18K is now a very important support level. If that gives way, I think that the next stop for Bitcoin will be around 12,500 US dollar. Obviously, we'll have many sector spotlights to talk about this before that happens, but I just wanted to make you aware of these major levels that I'm watching for Bitcoin US dollars. So for the near term, I think we're going up, possibly testing 25K. If we take that out, the next level will be 28, but that's probably going to be too much for Bitcoin at the moment. And please be careful when it drops below 17.5. Sectors are on the move. Things seem to be slowly starting to shift. And if we start on the weekly RRG here on the left-hand side, there is a couple of things that catch the eye. The first thing obviously is the pretty long tail of XLY, Consumer Discretionary, which is now pushing into the leading quadrant at stable relative momentum, but picking up on the JDK-RS ratio scale, so picking up relative strength. That's undeniable a good thing. XLK is already inside the leading quadrant. Technology losing relative momentum, but still there. And you see that XLI, the industrial sector, is rotating into the leading quadrant from weakening, and we know that that is a strong sign. Another sector that is definitely starting to pick up is financials, XLF, which is inside the improving quadrant and starting to move towards the leading quadrant at a strong RRG heading. And to a lesser degree, we see a similar rotation for XLB, although that is still inside the lagging quadrant. What is more reinforcing for a shift to more growth-oriented stocks and a risk-on attitude, at least in the near term, is the further deterioration of the defensive sectors. You see that XLP and XLV are now coming closer to crossing below 100 on the RS ratio scale. They're inside weakening, but heading lower on the RS ratio scale and moving towards the lagging quadrant. And you see that XLU, still the highest reading on the RS ratio scale, but moving left, picking up a little bit of momentum, but not much. XLE seems to be ending its corrective period, its corrective move, and is now moving back to the leading quadrant again. And if there is if there's one thing that you could do, or no, let me rephrase that. One thing which almost guarantees an outperformance over the S&P 500 is to stay away from communication services. If you look at the tail of XLC, it's rotating back from improving into the lagging quadrant, and the chart looks absolutely horrible. If you translate all of that to the daily RRG, then you see another rotation, a wide rotation for the energy sector. It's inside weakening, but there's plenty of room to maneuver and get back up and in sync with the weekly tail of XLE, which is inside weakening. If we look at the defensive sectors, so XLP, XLV, and XLU, then you can see that they are inside leading on the daily scale, but rolling over. They're already starting to lose relative momentum. And very soon they will be supporting a further weakness of those defensive sectors inside the weakening quadrant there. As I told you, one thing that you need to avoid, that's the communication services sector. Here on the daily, that tail is already starting to roll over and getting back in sync with the weak rotation as we see it on the weekly chart. And if you look at XLY, that is moving right through the center of the chart into the leading quadrant at a strong RRG heading. And that is supporting that strength that we saw on the weekly chart. And the same is happening for financials, XLF. XLK technology needs a bit more work as it is in lagging on the daily chart. But very soon, if this rotation continues, at least the RRG heading will be supportive for a longer stay of technology sector inside the leading quadrant. If we go to the individual charts, then we have Consumer Discretionary. It looks as if we have a higher low in place right now, and we are now challenging that falling resistance line. We see that relative strength is getting back above a horizontal level, and obviously both RRG lines above 100. That's pushing the tail into the leading quadrant. And obviously that is an important sector for the S&P 500, so it'll support the stock market in general. If we look at technology, here also it looks as if a higher low is being put into place, and it looks as if that old falling resistance line is catching it as support together with that high that we saw here in June a couple of months ago. If we look at the industrial sector, quite similar. It looks as if a higher low is in place. We're challenging that former support level that acted as resistance. Overshot, came back. If we get back above that level, that will definitely keep our relative strength of industrials versus SPY above that overhead resistance level, and it keep the RRG lines above 100. Financials then, I think that is probably one of the more interesting charts. We have a break of that support level, and if I just eyeball this chart, lacking a better word, this could end up being an inverted head and shoulders pattern, with the head finding support at an obviously important horizontal level, which was tested in 2018, 2019, 2020, and again at the start of this year, last year, 2021. And the most recent low was at the level that we saw in May. First hurdle to take is that falling resistance line. And if we take out 36, that probably will ignite a strong rally for the financial sector. And finally, we have energy, which is working its way higher and watching that resistance around 85. And then last and least, that communication services sector, which I already mentioned, working its way lower inside the falling channel. Double resistance overhead, but look at that relative strength. It's falling again below another support level, and it's pushing both RRG lines below 100. I don't think anything good will happen in communication services in the next couple of weeks. And this concludes Sector Spotlight. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. You can watch the show on YouTube or via StockCharts television or on any of the on-demand channels. I'm looking forward to seeing you again next week, same time, same place, for a new episode of Sector Spotlight.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.